Hello, welcome to Alex Financial Insight Show. In today's video, I will present comparative stock growth analysis for the 5 leading tech giants. This analysis will helpful for strategic decision making. And now let us start. Okay, comparative stock growth analysis for leading tech giants. Insight for strategic decision. In this presentation, I will look into the stock growth pattern for the leading tech giants. A focus is given to NVIDIA, Amazon, Apple, Google or Alphabet, and Microsoft. I will use stock price data from 2019 to 2024. So this is the trend of the stock price growth over the 6 years period that is under consideration. So looking at this graph, the first thing that comes into mind is the time period between quarter 4 of 2021 and quarter 3 of 2022. Okay, this is a COVID period, and as you can see, for all 5 tech companies under consideration, there is a negative stock price growth. Okay, so in terms of stock price decline, gross decline, NVIDIA takes the lead. Okay, so NVIDIA's average stock decline was like about 14.25% if you aggregate it and see. And then that is followed by Amazon. Amazon declined by 12.39%. And then it is followed by Google, which is declined by about like 9.7%. And Apple declined by about 8.3%. And Microsoft is declined by about 7%. Basically, just on this graph, the dark blue line is for NVIDIA, the orange portion is for Amazon, and the green is for Apple, and the light blue is for Google, and the purple is for Microsoft. Okay, so now after we see this, let us just see what we observe here. What we observe here is that, as I mentioned before, for just the COVID period, that active COVID period, as I mentioned, NVIDIA declined, by far by 14.25%. Amazon declined by 12.4%, and Google declined by about 9.8%, and Apple by about 8.3%, and Microsoft declined by 7%. Okay, so then overall, if we just see a summary table of that graph, a summary table of that graph shows us that like NVIDIA overall for the 6 periods has the highest growth. Okay, if you look at the first row, NVIDIA's growth rate is 18.25%. The growth rate here is in percent. It is 18.25%, and that is followed by Apple, which has like 8.2% growth, and then Microsoft, and then comes Google, and Amazon is the last. Okay, and looking at further look, NVIDIA's growth rate is more than twice that of Apple. Okay, and it is almost 4 times that of Amazon. Okay, and Apple's growth is also nearly twice that of Amazon. Okay, and then now let's see the volatility of the stock price of these companies. Okay, so volatility is measured using the standard deviation. Okay, and as you know, this measure standard deviation tells us the relative fluctuation of each stock. Okay, and now as you can see from the table, NVIDIA has the highest standard deviation. Yeah, it's by far higher than all others. Okay, basically we can infer that there is a speculative stock movement for NVIDIA. Okay, and in terms of orders, then NVIDIA has the highest standard deviation, which is followed by Amazon, and then Amazon has higher than that of Apple. Apple has higher than that of Google, and then Google has higher than that of Microsoft. Okay, and now if you just see, Apple, Google, Microsoft, as compared to Nvidia, we can say that they have really less speculative stock movement, okay, as compared to Nvidia. And now we have seen the stock growth, and we have seen the standard deviation for each of the stock, or we have seen the volatility for each of the stock. And now let us see standardized stock growth. What is the trend of the standardized stock growth? Okay. What does this help us? This helps us to know stock growth relative to historical volatility is one thing, and also the resulting growth now will be a risk-adjusted growth. Okay, it will be a risk-adjusted growth, and let's see what the graph look like. This is the graph for the standardized stock growth. Okay, and pretty much it is has the same pattern as the previous graph. And if you see the time period between quarter 4 of 2021 and quarter 3 of 2022, all companies showed a negative stock growth, and now the order is changed, okay, for this time period, that COVID period. Google, this growth is like Google stock declined by far as compared to all of them, and that is followed by Amazon, and then is Microsoft, and look, Nvidia is the fourth. Okay, when we see the standardized stock growth and what happened during the COVID period, okay, Nvidia's growth is like least as compared to the others. Okay, and then Apple basically has the least decline over that time period. That was the graph. See, and let us just summarize what we noticed. What we noticed is is that for that period between quarter 4 of 2021 and the quarter 3 of 2022, all stock underperformed, but Google has now the largest underperformance. Okay, in terms of order, Google is the most underperforming, followed by Amazon, then Microsoft, Nvidia, and Apple. Okay, so basically it means like Nvidia and Apple struggled less as compared to say Google and Amazon and like that. Okay, now let's see a table for standardized growth. This is a table, okay, and the table clearly shows us that Nvidia delivered higher risk-adjusted growth. Okay, this growth is after we take out volatility, and still Nvidia is the highest performer. Okay, and this is the same as the situation where we compared the unadjusted stock growth. Look at now Apple and Microsoft. Apple and Microsoft have the same standard growth here. In the unadjusted growth situation, Apple performed better than Microsoft, but when we take account of the volatility for the time period we are considering, they have pretty much the same growth. Okay, but Google performed well, but lower than the top three, and Amazon has the least risk-adjusted growth, and this is the same pattern as the situation that we observed under the unadjusted growth. Okay, so having looked at all of the graph and the tables, what do we conclude? What we conclude is that Nvidia has high volatility but higher growth. So for risk-tolerant investors, they can look and go for Nvidia. And basically because of this fluctuation, we cannot just invest all of our resources on Nvidia. Then Microsoft and Apple, they offer moderate growth, okay, but have lower volatility. So which means that they are suitable for those who are looking for balanced portfolio and those who target a reliable growth. And then Google is not as attractive as it appears, basically. Okay, it appears means it's not as attractive as Nvidia or Microsoft and Apple, but we cannot discount Google, obviously, yeah, because it has AI and cloud initiatives and all of that. It's good for long-term investment, but lower than the top three performers. Amazon, Amazon basically appears to underperform, its peers. And it seems like it appeals to investors who are focused on stability in the long-term investing, like value investing and stuff like that, when we compare these five groups. Thank you for watching. Please subscribe if you like the video, and also please provide comment and suggestion. Thanks again.